Alrighty. So in today's video, I want to share with you the simplest way for beginners to become profitable trading options. So if you've been trading options for not too long, maybe for a year or two, or maybe you have not been profitable, even though you've been trading for quite some time, then this video is for you. And the reason I wanted to create this video is because not too long ago, I've actually compiled a survey result which I've been doing on my audience just to find out a little bit more to see whether they have been profitable trading options. So this way I can find out, how I can help them with the content that I create. So the good news is that actually quite a number of my audience are profitable, right? As you can see over here, they are all profitable. And one of the common denominator that I see is that they have been trading for quite some time, right? More than 5 years. Usually at this point, you should have gotten a good grasp of how options should work, and you're able to, have a strategy where it's working for you for the long term, right? Other people, 1 to 5 years, that's not so bad as well. Some people less than a year, and they're already profitable, right? So this is a good thing. And some of you have actually wrote in to me as well to share your results, right? So these are some of my audience where they have written in to me to say that, they have used some of my strategies which I shared on YouTube, and they have gotten, pretty decent results with it. So as you can see over here, this is one of my YouTube audience. He has not put on that many trades, but so far he has been doing pretty well, right? As you can see, he put on 7 trades so far, 100% winner, which is always good. But as I always say, you will never get 100% winner if you trade long enough, right? Losses will come, drawdown will come, losing streaks will happen, just a matter of time. But definitely good to see those winners at the start. And at the same time as well, got quite a number of people have been commenting on my YouTube channel saying that they did pretty well as well. But at the same time, for those people that have been profitable, there have been many more who have not been profitable, right? So as you can see over here, there are quite a number of people who have yet to use options trading to be profitable for them. And a number of people have actually been trading options for more than 5 years, but they are still not able to be profitable. In fact, I have just recently spoken to another trader who mentioned that for the first 7+ years, he actually was jumping from strategy to strategy and was not able to make a profit, right? No matter what he did. And one of the biggest thing that he mentioned that he couldn't get a profit was because he wasn't sure what strategy to use, and also because he wasn't sure when to enter and exit. So these are actually very common challenges that many people face. So he mentioned that he pretty much wasted 7+ of his life and realized that he actually overcomplicated things, right? You don't actually have to make options trading so complicated. So you just have to make the strategy simple in order for you to be profitable in the long term. So as you can see over here, one of the top challenges that a number of my audience have mentioned, why they are not profitable, is because of not knowing what strategy to use, and also the timing, right? As you can see over here, it says when to exit. So this is regarding the timing, wrong timing, right? Seems like wrong timing is trading, which strategy to use and timing, and also trying to find the right underlying. So if you too have this challenge where you're not sure what strategy to use, when to enter and exit because of the timing, and also which underlying to choose, then this video is for you, right? Because I'm going to share with you exactly what strategy to use, what is the underlying that you're going to trade on, and you do not have to worry about timing, right? So what is this strategy? Well, this strategy is what I call the perpetual put spread on SPY, right? So first of all, why SPY? So as you can see over here, this is the chart of SPY for the past, 20 years or so. And you can see that the market has just kept going up. So SPY is a positive drift vehicle where the market wants to go up over the long term. So if you were to put on the bullish strategy like the put spread, then it's naturally going to be profitable over the long term. Now at this point, you might have the question, Davis, why don't I just buy and hold SPY, right? If I just buy and hold SPY, I'm going to get a return that is pretty decent over the long term. And that is a very good question, right? Because if you were to just buy and hold SPY, the average return is about 8 to 10% per year. And it's definitely much better than if you were to put in the banks. So the question is, how are options, the return, compared to buy and hold SPY? So as you can see over here, this is the short put on SPY. So first of all, in the long term, it's also profitable, right? It makes sense because this is a bullish strategy. Short put is a bullish strategy, and the market keeps going up in the long term. But the question is, does the return actually do better than if you buy and hold SPY for the long term? Well, the answer is that it actually does, right? Because if options do not get a better return than buy and hold SPY, then there's no point for the whole vehicle of options in the first place, right? So as you can see over here, this is a study done by the Tasty Trade team where they put on the 30 delta short put, right? So basically what they do is that they sell the put option, and then once it's either expired or it reaches the 21 DTE, they close it out, they put it on again. So you're always in the market, right? So it's continuous. So as you can see, regardless whether you hold to expiration or whether you exit at 21 DTE, your return is going to be higher. And this is also a pretty statistically significant study because as you can see, it dated all the way back to before the financial crisis in 2008. And again, in the long term, it's profitable. Now, what about the put spread, right? So the bull put spread, as you can see, same thing. It's profitable as well in the long term, but what about the return? And as you can see over here, if you were to put on the put spread, regardless whether it's the $5 wide or this is what you call the dynamic put spread, where it's based on delta, you're still going to get a higher return than if you buy and hold SPY. So the whole idea of options is to give you a leveraged return, right? Because it's leveraged. But at the same time, there's also some risk where you need to keep in mind so that you do not over leverage to the point whereby if there's going to be a crash, you're going to be wiped out. So that is why money management is also very important. So if you were to just compare the returns based on options versus buy and hold SPY, options will generate you a better, higher return, but it's only if you know how to manage it properly. Now, the next thing you might be asking is, Davis, instead of just, putting on this put spread or the short put continuously, why don't I just time the market? This way, at least, there's a better chance for the trade to work out rather than, ride it all the way down, right? So that is a very good question. And for this, let's refer to this infographic by JP Morgan. By the way, if you like this video so far, please subscribe and also click the thumbs up button. And also do get your free copy of the Options Income Blueprint, where I share the top 3 option strategies that help you generate a consistent income each month, trading just 1 to 2 hours a day, right? So if you want to go ahead to get this copy, just head on over to optionswithdavis.com/blueprint. All right, back to the video. So as you can see over here, this is a very nice infographic that tells you, what is the value of the money. Let's say you invested $10,000 in the S&P from this period, right? 2003 to 2022. So you can see over here that during this time, if you have been invested throughout, then you can see that you will be up about $64,000 on your capital of $10,000, which is pretty good. But this is only if you have invested all this. Now, what happens if you try and time the market and you actually miss the 10 best days, right? As you can see, if you miss the 10 best days, your return, the money that you make, has dropped significantly, all from just 10 days out of so many years, right? This is almost 2 decades. Out of 2 decades, you miss 10 days, your return has been cut by more than half. And what if you miss the best 20 days? As you can see, your return is going to be even lesser and lesser. So if you miss 60 days out of the 2 decades that you have been trading SPY, then your return is going to be so measly that you might as well just buy and hold SPY. So this is one of the issues of trying to time the market. So as you can see, a lot of people, they have challenges with timing. So instead of timing the market, just be continuously in the market, but this time using options. So as you can see over here, they even break down the annual return. So if you are invested in all this, then this is the average that you get, right? 9.8%, which is close to 10% for the 2 decades from 2003 to 2022. If you miss the 10 best days, then your return has pretty much dropped almost to half, right? 5.6%. And then if you miss the 20 days, you're now down to 2.9%. And at this point, it's not even better than if you were to put inside, T-bills. And if you miss the 30 best days, then you're pretty much only getting 0.8%, which pretty much means that there's no point for you to even have been trading the SPY in the first place. So that is why the best timing of the market is just not time it at all. Be in the market all the time. Now, at this point, you might be asking, but Davis, what if I enter into, the put spread right now or the short put and then it's a bear market? Should I continue doing it or wait until the bear market is over and then I do it again? Well, first of all, do you even know when the bear market will end, right? Because by the time it ends, the market would have already gone up way so much higher. So again, that's the whole problem of timing the market. And secondly, let's refer to this article down here by the Visual Capitalist. So it's a pretty good article to show you why timing the market often going to lead you to a very, very poor performance. Because if you were to see here, the best days take place during the bear markets. So if you were to actually stop trading during the bear market, especially the put spread or the short put, then you're going to miss out the returns, right? As you can see over here, all of these times down here where the market has its best days are during the crashes, right? As you can see, 2008, this is during the financial crisis, the subprime crisis. Then 2020, this is where the pandemic is, and the market has a flash crash and it went back up, right? So as you can see, most of it, the best 10 days are actually during the 2008 and 2020. So had you totally missed this whole period, then you have missed out on the returns, right? So as you can see, 7 of the 10 best days happened when the market was in the bear market territory. And then they go on to say, adding to this, many of the best days take place shortly after the worst days, right? In 2020, the second best day fell right after the second worst day that year. Similarly, in 2015, the best day of the year occurred 2 days after its worst day. So interestingly, the worst days in the market typically occurred in bull markets. So if you want to enter only during bull markets and you skip all the bear markets, chances are that your return is not going to be as good if you continue to trade throughout the bear market. So the question is, what if it's the bear market? Then you should be happy, right? Because that is the time when you put on the strategy and you continuously put it on without worrying about timing, you're going to get the returns whereby these are going to be the best days of your trades. So now that we have already established, right, that we don't have to worry about timing and we can just use a very simple strategy just on SPY, how do we get started? So I'm going to give you 3 simple steps to get started on this perpetual put spread. So step 1, sell the 20 to 30 delta bull put spread. So basically the bull put spread has the short put and then you have the long put. So for this short put part, go for the 20 to 30 delta mark. So how do you know what's the 20 to 30 delta mark? All you got to do is take a look at your option chain and take a look at the delta column. This is where it will tell you what's the delta. So you can pick anywhere from 20 to 30 deltas. So why 20 to 30 deltas? Well, that's because that's the study that I've actually shown you guys, right? So this is based on the Tasty Trade studies. And as you can see, they use either 30 delta put, or in this case, this will be the 20 delta put spread. Right, so either 20 to 30 deltas, they are both fine depending on how aggressive or much more conservative you are. And then go for about $5 to $10 wide depending on your own account size. So you definitely can do this if you have a small account, and then choose around 45 DTEs, because as you know, that is the place whereby the realized move is often the time lesser than the expected move, and this is our edge in options trading. If you do not utilize the 45 DTE, if you go lesser than that, then chances are this edge will not be prevalent in your trade. So to play it safe, we stay around the 45 DTE. Now, step 2, when it's 21 DTE, that means when there's 21 days left to expiration, close it. So how do you know when it's 21 DTE? It's very simple. So if you start off with 45 DTE thereabouts, all you got to do is just wait until it drops down to 21 days left to expiration, and then you close out this trade. So your holding period on average will be about 24 days. So as you can see, this is not a very intensive management kind of strategy. Just put it on, go on to do your own things during the day, go about your work. And then only once it's close to this date, right, 21 DT, open up your platform, close it out, and then go to step 3, back to step 1. Basically open up the trade again, rinse and repeat. And here's the key thing about 21 DT is to close it regardless if it's a profit or loss, because it is already taken into account based on the studies, as you can see over here, right? So in the long term, as long as you do this on SPY, you are going to get a long-term profit that is going to be better than a buy and hold SPY. Now, The question you might probably have is, but Davis, will it always be profitable, right, every single year? And the answer is, of course not. Guys, you need to understand that when we are trading options, it's not like some miracle vehicle whereby you will never lose, right? There will still be losses, right? Even just by the win rate alone, even though if it's an 80% win rate or 90% win rate, there can be a 10 to 20% chance of a loss. And you can have losing streaks as well. So as you can see over here, in 2008, right, if you were to take a look at 2008, close to the left-hand side, you can see for a period of time, maybe about 2 years plus, you will probably still be in a drawdown, right? You will see your account is still negative, and this is normal. Even if you buy and hold SPY, it's still the same. But as long as you continuously put it on, and remember the article which I showed you earlier, if you had just missed out on the best days during the bear market, you're going to miss out on the best returns. So this is a time where you want to continually put it on. And even same thing as well, almost as recent as sometime during around 2018 to 2020, you can see that about 2 years, you're probably going to be in a drawdown as well. But again, remember, we are in this game for the long term. Don't just look at 1-2 years, look at the next at least 3 to 5 years. You should be able to see an overall profit in the end. Alright, so this is the perpetual put spread on SPY. So if you have been struggling to be profitable in options and one of your problems is timing or what strategy to use and on which underlying, then just use this strategy and let me know how it goes for you. By the way, if you like this video, then you're absolutely going to love this next video which I have for you. So go ahead and watch that video right now. Also, if you haven't already gotten your free copy of the Options Income Blueprint, you can do so just by clicking this link down here on your screen and you'll be able to get it for free. Alright, I will see you in the next video.